Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So world markets are off a bit after a tremendous move that we saw in September. Our futures relatively quiet ahead of the Fed beginning the first of its two-day meeting. And yesterday we saw, of course, markets gap up in the morning on news that Larry Summers was bowing out of the race to be the next head of the Federal Reserve, but the move lacked real follow-through. So do you take that as a cautionary sign, Scott?
Well, it just goes with the thesis that entries and exits matter. And yesterday, the gap up was big, and I think prudent traders like, okay, we can't chase this gap up, but can you fade it? I think overall, I don't think it created so much technical damage. The bears that have been bearish all year are now calling for a double top. I think that's way too early. You look at the chart here of the SPX, and you'll see that, from the trend that's been strong since November that got tested here in June, stayed intact in August. You take a close look here, you will see that, yes, could we have broken that trend? We didn't. We reclaimed this area with a nice little adjustment area at 1641. Then again here at 1664. And then yesterday, anytime you get back to the old highs, it does bring out sellers. Look how extended we are from the 821 in the 50-day. So overall, maybe we do a little bit more digestive work before new highs. And then again, who wants to be all in, long or even in the way when you do have a two-day Fed meeting where I do think the pace of purchase is just going to be reduced by 10 to 12 billion.
Right, that is the expectation. But, we've talked so much about the 2013 theme of going long the TBT, playing rising rates. And yesterday, in yesterday's morning call, we talked about how rates had pulled back a little bit. That could actually be a buying opportunity in the TBT, and it looks like it was. Yeah,
well, yesterday they opened lower because everyone said, oh, no, now, rates are going to go lower because Summers is bowing out and Yellen is so easy. But anyway, she's been on the Federal Reserve, with the group for a while, and I do think I can't say that no matter what, but my thesis for 2013 that rates should rise, and I continue that for next year. So yesterday was a little emotional. When it's emotional, you could make money and you can embrace it. You look at the chart of the TBT real quickly, you will see that if you bought the open here, it didn't even get to the 50-day that we were at, on August 30th, went positive, went green, creating another, wedge type pattern here that I do think does get resolved to the upside. So if you want to make some money with rates rising, I think being long the TBT and short the the TLT is one way to go if you agree with me on that thesis.
Meanwhile, yesterday the banks held up well. They did not fade as much as the rest of the market. A good overall sign, I would say.
Yeah, it just shows you that some things went red and some things got sold quicker, but the banks did hold up, which I think is something to watch. You look at Goldman Sachs, I do think it still looks good. It couldn't break above the 2013 highs yesterday, but I think it's still in the game to do so. Morgan did it prior, showing relative strength, and overall, the banks is something to look at today to see if they stay in the game and extend higher.
And another theme this year, of course, has been looking for potential setups as money rotates, and it looks like the solar group is trying to get back in play. What are some of your favorite setups in that group?
Well, I'm not really that good at the solar names. Sprung's, I think, focuses on it a little bit more. But, I always look at Solar City because I'm an Elon Musk fan. And you look here, this chart does look pretty good. Here is this, descending trend line. It woke up with a nice potent day. Nice bull flag type setup. So I do think if it starts getting above 37 with some authority, I think that's a setup. You look at FSLR, it also looks pretty good. Had a big gap down, it's been absorbing this lower level. So, it's definitely a laggard type trade, but above 40-40, maybe there's some action there for traders.
And we got to mention Apple looked pretty weak yesterday, provided some nice downside follow through for the shorts. Looked like that trade changed pretty quickly.
Well, going into event day, you never know what's going to happen. And what happened was, everyone wasn't wowed. Tim Cook was Tim Cook, and you had to have quick feet. And with Apple, that's the way it's been. It's almost a year since that 700 top. And, if you look at the chart of Apple, you will see that there has been opportunities, but you had to really, think fast. And right here was your little topping pattern. Right here is when the intermediate trend broke. Right here is when the more macro trend broke. Then we've been trading it a little closer up here. So if you look here, it did have a really nice move for a lot of us when it broke this trend line short term and had the gap up on earnings. But then once it didn't hold this 503.50, for me, the trade changed. I didn't know this was going to happen, but you never know what has to happen. But overall, pretty broken now. I would say it's gapping lower today. Some might look for some type of, red dog reversal at 447 for some type of opportunity. And so will I. If you sold at 503.50, you have the luxury of maybe, testing the 445s. But, I would be very skeptical for anything to follow through there.
And of course, we'll be talking about all this and more in the full morning call, so stay with us.